Good afternoon and welcome to the daily FX daily wrap up. And we're seeing the euro break higher here. We did have our buys chart this morning, as if you're with us on the European crossover webinar for the cash dollar index, looking for support coming in here on the cash at 97.21. We had a pars at 45, and it looks like we found support right here at 97.21. You can see that we have our bias chart set up here at ForexAnalytix. We're just on the European crossover webinar when we do the bias charts, focused primarily for day trading / scalping. And the euro we had to 12.20, but funny thing happened on the way to palladium, and I'll show you where on the euro we had. And really, we can do a recap. We're going to get ready for the RBA, but obviously bullish comments push things. Here was our bias chart resistance here at 12.20. We came in here and we kissed it, and we just broke out here with Bullard, indicating that maybe looking for a cut, or a cut rate may be appropriate. We just had some resistance here at the 12.47. I thought they may just get past the 12.50. Looks like they just nicked it for levels that we were looking above in here. Actually, I was looking at the 12.58 right in here. If we try and push this a little bit further, and we might just see a little bit of a pause. But going into Asia and into European trading, I think we may come up here into this 12.58 area. Obviously, this was the 12.20. This was our resistance earlier, but we moved this up to about right there, 12.58. And if you look at this, and we came up to the 38%, and the market did even flinch a bit. As I said, just trying to come in on this because really I was going to go in and spend some time looking at the cross rates for the Aussie, but obviously this grabbed everything and turned things around a little bit. But you can see the 38% here. We just nicked up here and looks like we made it to about 12.51, and we're dipping back here. But with Bullard talking, this is a little bit of a game changer in a sense that one of the reasons that we were looking for a pullback in the dollar, and we'll go back to, let me go to the dollar index, and I've been beating this thing like a dead horse for over a week, was because, as I mentioned, not this Thursday, but the previous Thursday, we had the manufacturing data, and it was the worst manufacturing data in a decade. And the market was already starting to price in or looking into a possible cut by the Fed, in the fall. And I told people, whether you believed it or not, you're still going to have to price it in. And whereas the Federal Reserve has been divergent policy, we could be starting to spin the other way around a little bit. And one of the reasons the dollar had been so strong had been just because of that. Even if you saw data weakening here or that, it was still completely different policy than most of the other central banks. But when you start to have to factor that in, then you would have to reprice that in. Here's our first level at 97.20. We think we're going to get here down to 96.63. I'd put in here, this is from the, get this out of the way. So coming into the crossover we had already here, the dollar looks set for a pullback. The first target is 96.63, the 38%, with initial support at 97.20. Well, wham, bam, thank you, man. We just hit the 97.20. And like I said, one of the guys in the room, pretty good trader there, he had mentioned over the, coming into Friday, and he was saying, I think, trading is just not the technicals. It's a blend of technicals and fundamentals. And I think that hits on the head, and really the reason why generally when we start off with the European crossover, we'll go over a couple of FX stories, and we try and get the sentiment and the mood for the day, basically get the flavor for what the market's looking at. So once again, like I said, with the poor data we've been getting, the interest rates falling and falling and falling. I mentioned this last week. The U.S. interest rates are not falling; they're actually collapsing. So, and that's just music to the ears of gold, and we've seen gold really start to move here. And we'll go and take a quick look at it as we kind of factor in what's all happening now as the complexion changes now with Bullard's comments. So when we take a look here at gold, I haven't really done anything in gold in a while, but we'll take a look here. Some people were talking about it this morning, trying to step in the way, and I was like, you know what, I've seen this movie before, and we learn the most from our mistakes. I've tried to go in and step in when I think we've got a game changer, and I think that's what we were starting to see in gold. And certainly enough, we started pushing higher, and we said, hey, look, I think this market wants to get to 1323. And boy, if we've gone and taken off, well, the comments from Bullard is just open the door. And I'll tell you what, gold does react to the dollar, but I tell you what, gold really reacts to interest rates. And we know what's been happening with interest rates. And so really, I've mentioned it to people in the chat room, the dollar going down, that's just gravy. That's just adding just a little bit more extra, because when it comes to those interest rates and we're going to be falling, then gold is just going to make the most of it. And I think we could see a further extended move well beyond this. Now, we've got a little bit of a resistance in here, but I think that one of the things that I talked about, this is months and months ago, we saw a little bit of it here when we ran up here, is, gold's been so out of favor for so long that now when you see this volatility in the continued fall in stock market, people start to move some of their funds into gold, maybe just a little bit, maybe not a whole lot. And that provides a nice undertone bid. And then, like I said, when you get falling interest rates, and if the dollar does pull back in light of that, considering how strong it is, boy, we can really add some juice to this and probably get up to, probably about 1375 or something like that. We shall go in and see. But let's go on and move back. Like I said, I got a little off kilter because I thought today we're going to be focusing on the RBA. And but like I said, the big move in the dollar certainly changed things and caused a big jump in here into the euro. I thought specifically here, looking at the euro, I thought we would just come up here to this 1220, which we had as our bias chart resistance, and then we'd kind of like roll back a little bit, but it looked like we had a nice grab in that 12 area. Right now, I would look for them to move up in Asia and into Europe, probably around this 1258-ish area. We shall see, but what happens. But I think anybody that's short, you have to now reprice in or recalculate what things are still bad in Europe, but not to over dramatize, but that's a bit of a game changer then now, because like I said, people were starting to we're talking about pricing in a Fed a fall from the Fed, a cut in the fall, and probably seemed a little bit too adventurous at the time a couple weeks ago. Then started getting a little bit more steam. And then my take was, with that manufacturing data, the worst in a decade, it grabbed a little bit. But now with Bullard coming out and saying that, boy, now that kind of flips things around. My take is if you're short, you'd probably be looking to say, well, where can I go in and cover? Doesn't necessarily mean you're ready to get long, big, but you probably want to say, you know what, let me see where dips. And my thinking is, well, we can probably move a little bit further and push higher. We didn't even take even a pause at this 38%. So I think this 1258 looks good. There's some good. You can see this good level coming right across here, and some good volume coming at 1280. So you got a pretty good risk reward if you're still kin to wanting to short the euro. Then between 1258 to 1278, the 50% and 1280 being pretty good resistance if you're looking for what your risk is. Looking here with the Australian dollar, and we also saw dollar CAD break lower, and boy, we are breaking lower now. I'll go in and get in. Let's go and take a look at here. This is a market, the same thing here. I have not felt good about that market at all, and we'll look at our analysis. Once again, if you follow us, you're with ForexAnalytix, you get this analysis at 3 a.m. Central Standard Time in the morning. We cover the analysis to set it for the week ahead, and then Stelios replays it for those in the chat room. They have it on recording. They can watch it before the New York Open if you're not trading the European hours. But our take on the dollar CAD was dollar CAD closed above the elusive 3504. But the daily candle has bulls concerned. You can see that daily candle from Friday. A daily close below 34.77 will initially target a test of 33.82. And so you can see here, it certainly looks like we're on our way to potentially closing below 34.77. And you can see right here. And we've bounced, I mentioned several times, it's popped its head above the foxhole and been shot down several times. And we finally got above it, and we kind of straddled that floor right there, 35, and then we got above it. It looked like things were blue skies ahead, and here we are falling apart. And believe me, this has got to be a disappointment for a lot of bulls. And I know that people were still very bullish at dollar CAD. And so my take is, I'm thinking is that there's going to be a lot of stocks below this 34.77. Like, people that may still be bullish and say, you know what, I'm done with this doggone dollar cat. That's it. I hung around here and I hung around there. I hung around there. I finally thought I was on my way to, let's say 36, 37, whatever. And here we are, not only below 35, but we're going to close below some very key support here at 34.77. To me, I'm saying straight up, it's a sell signal. You close below 34.77 on daily close. Anyway, let's go on and move on with the Aussie. Have it, like I said, but the dollar kind of threw us off, so I need to touch on that and look where we may potentially, get to. I think we can still move higher in Asia. Is on the Aussie dollar. I just want to touch base on this real quickly. Just so we know where it stands, I had some other things, but let me go on and touch on this before we get going here. It was indicating that actually the cut is actually fully priced in. It says there are a risk to holding the Aussie dollar shorts, of course, given to the tomorrow. Well, obviously it rolls into the new session here in the States. It'll be in the evening for us. Tomorrow's cut for the RBA is 100% priced in. All 44 economists in Reuters survey expect the RBA to cut its cash rate. Now, one of the things we're looking here with the Aussie dollar, and I want to look at some of the Aussie pairs too, like the Euro Aussie, Aussie Yen. Certainly we're looking here with the Aussie dollar itself on, let's go move into that. So we're starting to turn away here with the dollar dipping. And one of the thoughts was, and we talked about that this morning, is it may come to a point of this, and they've been kind of talking about this for almost a week anyway, could be basically a sell the rumor, buy the fact. And the thought, the consensus is, of course, it's fully priced in, is that they don't believe that they're going to put any kind of a bias on the cut. So the real emphasis is going to come when Governor Lowe gives his statement later or answers questions. But they were thinking, unless he's going to imply that, boy, they're going to still go with more cuts. If they're going to say, yeah, we're doing this cut and we're going to see how things work out, then you might see the Aussie really start to go on and turn around here. And we're already starting to see this, obviously, with the dollar slide. So we'll see how much they pull back. And we may see a pullback on the initial cut, but we might turn around and flip back the other direction. And with that being said, and look at the dollar cat, it is still selling off in here. So that's what I was telling you. I mentioned to some peeps on the show is that, we get past this 34.77. I just think that we're just going to see like a boatload of stops. I mean, there probably are some people that are long and they're saying, okay, I'll hang on. I'm hoping it'll recover 34.77. But I tell you what, if it gets past 60, if it gets past 70, 60, it gets past 50. And look, we're just blowing and going to the downside right here. So obviously oil has a lot to do with this, but oil hasn't moved enough to justify this move. I think it's basically the peeps looking for the move above 135 are basically throwing in the towel at this point. Had they're done, are pretty much done with this thing. One last thing I want to look at before just moving to the Aussie pairs is the dollar peso. We certainly got that move last week, obviously with the talk about the tariffs, and the peso had broken above this trend line and actually been on a buy mode the whole time, but it wasn't doing anything with it. Obviously, this kicked it into high gear. If you're looking at resistance, we're looking here. Our buy chart resistance for a day is at 1980. I think we had 75 and 80, but I think we can still make this push up to potentially this 1995, which confluences with 1992 up in here. I'm thinking by the time we get, and I heard someone mention something, I think it might have been the FX macro, and that was my sentiments too, was come Wednesday, there'll be some kind of announcement. So this thing still has a chance to pull, and then once we get past that, something's going to be worked out, and this thing may just give a big chunk of it back, and it may take us all the way down to the 1941 to 38%, maybe even a little overshoot, but just be wary of that. But it's not giving much back, so it certainly looks like it wants to push into this 1988 to 1995, with 61% of 1992 and a half of this entire move, 2066 to 1875. Let's go and move into those cross rates we talked about. There we go. And here we got the Euro Aussie. One of the things we'd referenced about this is we had said here it had defended the 60.95 very well. And we've got some support just below here coming in here, 60.40. Look, with the idea that the RBA might be basically a sell the rumor, buy the, sell the rumor, buy the fact. We may end up seeing once again this thing turn around. The euro is already on its move, on its clip. So you may see a pullback in here to challenge these lows, 60.52, if we even get that. But look up here on the 62 even is probably right there, or maybe just above it. Let's say 62.13 will be a key area here for the Euro Aussie. Looking here with the Aussie yen. And we're looking at the daily chart in here. We did go in and make a pretty good move, moving lower, and open the door for a challenge of 74.73. This one might be a little bit different. We could actually, your risk level here on the Aussie yen, potentially right here, the 70, between 74, 47, and 73, and dip center probably going to be supported at that point. And then we can start to move a little bit higher. Probably not in the same, it's definitely not in the same boat as the Euro Aussie. And let's go and take a look at the sterling versus the Aussie. And right now I'm just looking on the daily charts. Apologies, I thought we were going to stay a little bit more on this. I was basically, the show was going to be focused on, and really the wrap up is just really a quick wrap up. And then we focus on the news coming up into Asia session, which is going to be the RBA. But obviously the dollar grabbed headlines, and it was important because that's really you hear that thing turned around like tossed out, a game changer. But to a certain extent, on a short-term basis, it really is with bullish comments. But looking here on the sterling versus the odd, very, very big support here at this 80.89. Maybe, like I said, we'll start to see this thing in here, challenge out here to this 80.89 here. But once again, like I said, this has just been falling like a rock. I mean, another one falling like a rock has been the guppy right here, which is just completely, just been absolutely obliterated during this time. But the big news, like I said, is going to be the RBA. But the take on the RBA, like I said, is it's fully priced in, 100% fully priced in. The thought is, and I saw that from some bank research from TD Ameritrade, they're thinking that their take is that they will not add a bias onto that, and the key is going to be the actual commentary, questions, whatever you want to call it, from low. And so if his take is basically, well, we've taken the cut, we're going to see how things go, we'll see if housing is going to hold up okay, employment, blah, 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 then you're probably going to see the Aussie come back with like gangbusters. And that's one of the things that was probably about 7 to 10 days ago, there was some talks that we could really see the same bounce right back. And we'll go and move back into the main screen. So we certainly we certainly have the we certainly have the possibility of going to make a run back here with the Aussie dollar. And the key level, if you're looking above, is going to be 70.27. 70.27 is an absolute huge level from way back here. You see that? So it comes way, way, way back, 70.27. So I think there's some initial resistance, when you think about the 70 cents, you can see how big this is, and this is on a daily chart, the 70.27. So you may just, like I said, depending on how this thing screams back, and if it does scream back because the dollar's already under its own pressure, then taking a look as to where we may go to, let's take a look here. We already had the market bounce back, so the most recent high, well, 70, yeah, you're looking right here, 70, basically 70.30 and 70.27 is 38%. My guess is if we go a little bananas here, as it turns around, I'd be looking for this move up in here. 70.56. And that's not even saying that much because there's some good resistance level of here at 70.70. But if you're looking for the market, somewhere between 56 and 70, if, like I said, we do see that sell the rumor, buy the fact, and you're seeing this euro dollar, it's not coming back. It's because you have to, one of the things you have to factor in also is, Blake, let's say you got to put yourself in the other fellow or other gal's shoes, is that if you're short this market, you're thinking, oh man, well, I'm hoping I'm going to get able to buy this thing on a dip. I'm sure they'll pull them back a little bit before the close. And if they don't, then there's that undertone bid to keep pushing the market as we get further into the close. So like I said, we're not even barely even pulling back, and we didn't even pause at this 38%. I mean, we just kind of just kept going higher and higher. So that's my thought is right now is that we have the opportunity here to go and move. And if you're of the ilk, as I said, you're thinking, I don't believe in the euro, these moves are exaggerated, then a good area coming in, you look at the 50%, that's at 1277, and I told you 1280 is a pretty good solid area. So right in here, this 1262-ish, but if they hold them here, it's probably going to be somewhere in between here during Asia, maybe even Europe. You get a better feel for it here looking at the 2-hour chart, which I like is my long dated chart. And you can see here coming here at 1258 and then at 1280 with the 50% here. But we did go and hit some support here. That was our bias chart support here on the cash dollar index, which is 97.24. But you can always get an overshoot with something like that. Headline like that, market allows for an overshoot. So good resistance here. I mean, we're looking for 96.63 to 38%, but you can go and overshoot this a little bit. And if you want to look for a little bit more volume in here, let's take a look. Probably down to about 97.13, maybe even push it even a little bit lower, which might spook them to send the euro up, like I said, in the upper 60s, but we shall see. That's all we've got here. Thanks for joining us here on the FX Daily Wrap-Up.